guys, and welcome back to my channel Basics with Strong Roots. My name is Richa Yadav and today we are here with the last session of dividend series. And in this part 3 and final session of dividend series, we are going to discuss two questions. The first one is, does the share price is going to be affected after the dividend distribution? And the another question is taxation on dividend distribution. Let's check it out. So let's start with our very first question, and that is, does the share price get affected after dividend distribution? So the answer is a big no. The dividend distribution does not affect the share price of any company. The reason is dividend distribution comes from net profit, or you can say PAT. That is nothing but profit after tax. So the dividend is coming from profit after tax. So it is affecting the profit of the company, and it is somewhere reducing the profit of the company in the company's book, but it is not going to affect the share price of the company. The company will still trade in the same share price or whatever the market movements will be, but because of this dividend distribution, the company's share price is not going to be affected. So now let's discuss our second question, and that is taxation of dividend. How we will do the taxation on dividend distribution? So there will be two kinds of things. One is the taxation will be in the hands of the companies, how the companies will are going to do the taxation, and the another will is the taxation in the hands of shareholders. So let's take the first question, that is in the hands of companies. Taxation of dividend in the hands of companies. So any company who is distributing the dividend is not liable to pay any kind of dividend on the dividend distribution amount. Okay, any company is not liable to pay any tax, not liable for tax on dividend on distributed dividend, you can say. Okay, but any company can deduct tax under section 194 at the rate of 10% if the amount of dividend is higher than 5,000 rupees. Okay, so I am writing it here, hope you guys can see this. Tax under section 194, the company will deduct 10%, that is TDS, from the amount of dividend, which is going to be paid to the shareholders. Suppose the company is paying the amount of dividend, that is INR 10,000 rupees. The company is paying INR 10,000 rupees as dividend to our shareholders. So the company is not liable to pay any tax on this 10,000 rupees. But the company has the right to deduct tax on this at the rate of 10% on this 10,000 rupees. So the company will deduct 1,000 rupees as tax from this dividend amount of 10,000 rupees. So now the shareholder is going to get 9,000 rupees or INR as dividend. So the conclusion of this point is that the companies are not going to pay any kind of tax on the whole amount of dividend which the company is distributing. There can be like the company is distributing 20 crores or 5 crores, or you can say 10 lakhs rupees as dividend, but the company is not liable to pay any kind of tax on that amount of dividend. But the company has full right to deduct 10% of tax from the amount of dividend distributed if the amount of dividend is exceeding INR 5,000 rupees. Here I would like to add one more point, that if the company is deducting 10% from the amount of distribution of from shareholders, there will not be any kind of deductions from LIC and GIC. LIC is Life Insurance Corporation and General Insurance Corporation, or any other insurer which has full beneficial interest. Like the insurance companies especially, they are having full beneficial interest, and they are, because they have invested the amount of investors from that belongs to the people. They have invested that amount into the company to get some kind of income for them, and that particular amount is insured with these companies. A specific amount is insured with these companies, and these companies are liable to pay a specific amount as a return to their policy holders. So any company will not do any kind of deductions from LIC, GIC, or any other insurer which has full beneficial interest. So now let's discuss another point, and that is taxation in the hands of shareholders. How the dividend will be taxed in the hands of shareholders when the shareholder is going to get the amount of dividend, how that amount will be taxed. So according to my research, there was an exemption limit under section 1034 till financial year, under section 1034 till financial year 1920. But in financial year, or you can say assessment year 2021, that exemption limit has been withdrawn from the government, and that time the government said that now the dividend is going to be taxed in the hands of shareholders. So as I have said earlier, that if the amount of dividend is exceeding the limit of 5,000 rupees, the shareholder is going to pay the TDS at the rate of 10%, and that is going to be cut by the company itself. So if the amount of dividend is exceeding that, the limit, the given limit of exemption is 5,000 rupees only, and if any shareholder is going to get the amount of dividend that is more than rupees 5,000, he is liable to pay TDS at the rate of 10%. But there is one more clause, that tax deduction in India should not exceed 20% of the dividend income. Like whatever the it is said that tax deducted on dividend should not exceed 20% of the dividend income. How come? Say the dividend income is 10,000 rupees. Now what will be the amount of 20% of it? That will be 2,000 rupees.
2,000.
So whatever the amount of TDS is going to be cut or deducted from the amount of dividend, that is not going to be exceed or in excess of 2,000 rupees. It should be in the limit of 2,000 rupees, and the slab of TDS is 10 to 37%. That depends on individual shareholders, or you can say the partnership firms, the companies, or LICs and GICs are not going to pay any kind of tax on these dividends. So the slab of TDS is 10 to 37%, but the amount of tax should not be exceed the 20% of the dividend income. So now if we are talking about the tax slabs, that is 10 to 37%, I want to clear one more thing, that if a shareholder gets the dividend from trading activities, like he is trading in a particular share on daily basis, and he gets dividend because he is holding the share before the X date. So from trading activities he is getting the amount of dividend. that particular amount of dividend is going to be taxed under the head of business and profession. But if that shareholder has invested a specific amount of in that particular share, the amount of dividend which he will get will be taxed in the head of other sources. So you all must be aware that for business and profession and for other sources, the tax slabs are different. The slabs of exemption, the slabs of amount and tax rates are different for both the kinds of incomes, and that is business or profession, and that is other sources. So a particular person should be aware of that if you will invest, you need to pay the tax at different rate, and if you are trading in a particular share and you will get the dividend from that share, then you need to pay the tax at a different rate of tax. So hope you guys understood that the share price never affects after the amount of dividend distribution. When the company distributes the dividend, the company is going to pay that dividend from its PAT, that is profit after tax. So the share price is not going to affect after the dividend distribution, and the tax rates and slabs are different from different heads of the taxation limits. So hope you guys understood these terms, and like, share and subscribe my channel, and don't forget to press the bell icon, because whenever you will press the bell icon, you will get the notifications of my new videos. And do write in the comment section if you are liking my videos, if you are not liking my videos, and if you have any kind of comments, suggestions and advices, please do write in the comment section. Your comments are most welcome. Stay safe, take care, bye bye.